Good afternoon, everyone. David Paul speaking. It's 4 o'clock on Wednesday, the 30th of May, and after yesterday's down day, I'm looking at the US market. I'm looking at the VectorVest composite of the US market, which is an equally weighted index of all of the shares that we follow on the North American markets, and it's having quite a strong day. There's the sell-off that we had, and as you can see, the market went into a pretty textbook symmetrical triangle with a textbook 5 waves. It recently broke and it came back over the last day or two, very dramatically yesterday, and charted a little double bottom over the last couple of days, which I think is relatively positive, as you can see here. So quite a strong day up the page. I'm reasonably bullish about this market, and I'm really bullish because of the performance of the weekly chart. So if I were to draw a weekly chart over 3 years, and we can see that this market is in a strong uptrend, and I always like to add my dear old friend the MACD, and I can see a reverse divergence or hidden divergence trade here, where in fact, as we can see, the price is making rising lows to here, and the MACD, the weekly MACD, is making a falling low. Now that's what some traders call a slingshot, and it has a high probability of preceding quite a strong momentum move, and it's called a slingshot for that reason. So Dr. Bart Diletto, the founder of VectorVest, has a fundamental model of the market, and that fundamental market model also suggests that there's more life to this bull market. So both technically and fundamentally, I think this market wants to go. Now, I have never owned shares in this animal before. It's called Amazon, and it's starting to look really good, certainly on my technical charts. There's the performance over the last year, and the share has gone from producing earnings per share of $8 to $11 since last November. And on VectorVest, we have these forecast earnings per share automatically on the chart. You don't have to go foraging around the internet to try and find them. And as you can see, this very strong run. Ladies and gentlemen, when you get a break out of a consolidation, when it gaps out of a consolidation, that's what I call the rocket launcher, and that's pretty much free money. It's a very high probability setup, a gap out of a consolidation, and the market has gone into this little range, which traders refer to as an ascending triangle. It's a very bullish formation, and I was expecting this share to come back and kiss this support before moving up the page. As you can see, there's a trend that came back here. It could certainly still come back, but if the general market keeps moving up, then I think that this thing wants to move up strongly with it, folks. And it's on a buy recommendation on VectorVest. As you can see, a few days ago, it actually charted a very strong outside day, which engulfed the market action of 1, 2, 3, 4, 5, 6 days. It ran all these stops. I think if there was more news out of Italy, bad news out of the euro, then it can easily come back and kiss these lows and nail some stops underneath those lows, but nevertheless, if this thing should break up the page with the general market, then this can be repeated, and my technical target on this, ladies and gentlemen, is over $1,900. So that's where I expect this thing to move very strongly up the page. I think that the risk to reward ratio of any trade here looks excellent indeed. Thanks very much for listening. Have a great trading day. Bye.